Okay, guys, welcome to the Investor's Guide to Memphis Real Estate. I'm Dean Harris, Vice President of Sales at our brokerage here at CrestCore Realty. I'm with Douglas Skipworth.
Hey,
you are our principal broker and owner, founder, our biggest client.
Yes.
All those good things. Today, we're going to jump right into this topic today because I feel like with our current market status and our market situation, I want to talk about why this recession has us excited.
Yeah.
I know that's an odd comment, but that's what this is. We're excited about this recession from a real estate standpoint, right? Clearly not on anyone's downfall or suffering, but so just to kind of preface that title a little bit,
good point.
we're why the recession has us excited in real estate terms. And, you know, recessions are in this, I've been in this business now I'm on my 21st year, and I have been, it's a long time. Yeah, right.
That's awesome. Congrats.
So 21st year, and I went through the 2008 scenario, recession, market crash, whatever you want to call it. This is nothing like that. The terms are not. The actual forecast is similar. I mean, we're seeing some similar trajectories, but we're never going to get from the housing market to where we were then. So the reason to be excited then was prices were plummeting and they were dropping down to 40 and 30 cents on the dollar, and who knew what was going on, and people were scooping them up. Now we're going from, we were really selling at 105 cents a dollar, if that makes sense. You know, we were selling real high. I think we're going to get back to the 65 and 70 mark at some point, where I think you'll be able to find some package deals and things like that. So when we think of terms of get excited about a recession from in our real estate world, what do you think of?
Yeah, no, I think that's a great way to, real estate is a cycle.
Yeah.
I mean, everybody knows that. And we were at the height of the cycle. So now, we're coming off the height of the cycle. I think you said it well. If you imagine the cycle being a straight line of being 100, we were potentially above 100.
Yeah.
And so now as we come, maybe we dip below 100.
Yeah.
But I think that's exactly right.
Yeah. I don't think we're going to have some huge plummet. I don't believe, unless there's something coming up here that none of us can see or predict, but I don't think that we're going to hit that. We had an interesting conversation before the podcast started here about, transparency and honesty about what's going on in our market, and things are down. Things are down 30 or 40% from where they were 12 months ago. But I pause on that because we were so inflated and numbers were so ballooned.
I'll give you some Memphis.
Let's hear some numbers
Memphis
to kind of back
Area
that up.
Association of Realtors. They just released their October 2022 numbers yesterday. So I just printed those out. So you're right. Year to date, October sales down. Well, year to date, you're down 7%. But we had a good run at the beginning of the year.
Yeah.
So just looking at October last year to October 21, October this year to October 21, down 25%.
Okay, so I hadn't even seen this.
25%. So not quite the 30%.
Yeah.
Okay, two things there. 2,000 sales last year.
Okay.
1,500 sales this year. So it's still 1,500 sales.
Right. That's what I'm trying to convey to people.
That's the excitement. That's the enthusiasm. That's why there's not the doom and gloom. 25% is the 25% decline. That's the headline.
It's taken over monster headline.
Still 1,500 sales, and that's a lot of sales in a month.
I'll tell you this. So from our numbers, because I think this is good for people to hear, we typically, before this interest rate hike began, the dramatic increase, the brokerage was doing 26.5 average. We'd hit 30.
Yes.
We'd be in the 31s, 32s frequently. We'd be in the 25s and up frequently. We're doing 8. We did 21 in October, and we're going to do probably 17 in November.
Yep.
So no, it isn't 30. It isn't 25. But we've got sales.
People are buying.
October, people are buying because
selling.
There's deals that are there. Let's hear some more of this.
And here's the thing that's also interesting to me is that the average sale price is up 2% from compared to month to month last year.
All right, I know what that tells me.
And it's 11% year to date. So because it went up from them. So again, all that to say, it's not that house prices have crashed down. It's not that nothing's happening in the market. It's that they were high. Whether they have stalled or plateaued is probably a better word, after increasing dramatically.
What it opened up was it qualified people that could afford it or could make it work at 3.5% to 5%.
Yes.
Those folks are gone.
Yes.
They can't make it work right now.
Right.
Or if they could make it work buying 5 right there, they can only make it work buying 2.
Yeah.
That's what's happening. There's not a stigma on Memphis or a stigma on investing in real estate anywhere. No. There's nothing. That's why it's so much different from 2008. In 2008, we had a housing crisis crash. I've told you the story. We were loaning money. I had a countrywide lender come into our office. I'll make this quick.
No.
Hey, Dean, we can do 535 credit score, stated income, 100% financing, and your builder's paying the closing cost. So if they can float $500 for 6 months, we'll build them a $250,000 house. And that's no exaggeration. That's what happened in 2008. We're not experiencing that now.
And they called them ninja loans.
Yes.
Remember? No income, no job, or assets.
Yes.
So ninja.
Yes.
No income, no job, no assets. So they don't do that anymore.
No.
And I went back to 2007, and that's 15 years worth of real estate inventory.
Yep.
In 2000, so this time last year, there was 2,000 houses for sale in the market. Okay. So, and we were selling 2,000 a month, 1 month of inventory.
Yes.
That's ridiculously low.
Yes.
So it's gone up 50% since then to 3,000, which is a huge increase.
Huge increase.
To 3,000. It was 3,500 at the end of 2019.
Okay.
So we're still not to where we were in 2019.
No.
In 2007, it was 12,000. It was 12,000 houses for sale. Last year, there was 2,000. This year, there are 3,000. So we're still at a quarter of what was for sale in 2007.
Was there were 12,000 houses?
12,000 listings. Then 10,000, 8,000, and it the inventory you can't see it, but maybe we can put the graph on there. But it was like the inventory had just gone down, and now it's up a little bit. But it seems so dramatic.
I know.
It seems so dramatic.
They were giving away TVs and car leases and everything to buy houses.
Yes. Yeah, Mercedes-Benz parked in the garage.
Kidding. I had builders giving 6-month leases away for them. A house full of televisions and whatever else could come with it to get rid of houses.
Totally believe it. And we're not there yet. But it's more of a buyer's market than it was.
It was. That's great. Those are great facts. I don't think we're ever going to get back to 12,000 houses available.
Man.
I don't.
Someday we will. Is it going to be in our lifetimes to buy that buying opportunity? Probably not in residential real estate, not in our lifetime. Because we've seen it, and we're not going to allow. And too many people have seen it, and it's not going to happen.
The only way they'll allow it to go back is if there's a generation of people that haven't seen it and they don't know to correct those mistakes. Is what you're
correct?
Saying.
Yeah.
And that might be the case.
Because we've talked about this with hedge funds and Wall Street. There's too much money who saw what happened when that happened.
Yeah.
That everybody would just be lined up waiting for that, and the competition would all of a sudden just drive up the price. Supply and demand. The demand would be so high. The demand is still pretty strong. The supply is still pretty low if you go back to Econ 101. So that's why prices haven't cratered, because the demand is high and the supply is low.
I have had 5 brand new investors reach out in the last 7 days to learn about Memphis real estate.
Yes.
They're ready to buy.
The demand is high.
Yeah, so don't get spooked by this. I think that's really the message, is don't be spooked by this. There's still stuff happening here.
Halloween's over, brother.
Everyone has been scared and we're done.
What comes after the scary time?
Yeah,
Thanksgiving.
Yeah, so here it comes. I know
that's just a calendar thing, but it's like, hey, we're all scared. We're all tense at times. We're uncertain.
Yeah.
And we are too.
Yeah.
And so what do? We go back and we read history, and we talk about it, and we listen to podcasts, and we read books, and we try to figure out what's happening, how we can calm ourselves down, how we can keep a level head. It's kind of like halftime
100%. We use the analogies. We're at halftime. You have to make some adjustments,
and you get your head clear, because when you're out there in the thick of it, you think, oh my goodness, that play, you can't get it out of your head that you ran a bad play.
We're down by 10 at halftime. We got to make adjustments to win.
Adjustments. Okay, forget the first half. What are we going to do in the second half? Now let's move forward.
Which is why the point of that's what the new investors are doing. They don't have any of the bad. They don't have any of the old pricing and the old thing.
Good. Yes.
They don't have any of that. One of my first notes here was like a market reset. That's essentially, you and I spoke yesterday in our meeting. We were talking about the way I feel about what's happening right now is all of my buyers that when things really started to get hot in 2016, 17, 18, 19, those buyers in that category were buying at a certain price and a certain interest rate and a certain process, right?
Yeah.
They have come into 2020 and 21 when the prices really started to go up, and they kind of paused and oh my gosh, I'm not paying that. They were able, but they weren't wanting to. The guys that are coming into this, guys and gals that are coming into this right now in the last 12 months, especially the last 6 months, they're making the numbers work with what they see and what they have, and it is working.
Oh, they've got a better perspective for this market.
They have a way better perspective of it. There is no stigma. There is no, well, I bought that house on this street for $50,000 and now they want $100,000. I couldn't get more upset at that when investors say that. Why do you care? If we're going to pay them off and the whole strategy is to buy and hold, really, then what do you care at the end of the day when it's paid off? I've said this 10 times. Are you and I going to be sitting on the beach together one day when we're all done and we're retired and we're going to look back and say, man, I can't believe I paid $25,000 more for 123 Main Street. I can't believe it. No, it's paid off and it's done. And so anyway, back to the investors that are coming in here now. Those guys are not jaded, and they don't have some kind of preconceived notion of what things were. This is how they are now. And this is not me preaching or talking out both sides of my mouth. I bought houses last month in same areas, one on the same street, for about $15,000, $16,000 more. Mm-hmm. I don't care.
Yeah, rents increase. I mean, there are all kinds of things. I like that, and I think you're right. It's like when people win championships, they don't talk about how big the margin was on the victory. You might talk about one game that we won by so many points, but it's like we won. We won.
Jordan's got 6 titles. Can you tell? I can, but can the normal person tell me what the 4 to how many games they won and lost in series? No.
Let alone who they beat.
Yeah, I can. I'm a weirdo. I can do it, but no one can do that.
Yeah,
no one can tell you who all they. No,
I know
beat.
He's got 6 champions. I know Kobe got 5. I don't know
LeBron's
who they played, what the score was, were they the MVP? I mean, it's like they won championships. You know, it's like, and that's what you remember, and you. So, I like that. It is. There's I like to read autobiographies. Love to read autobiographies, business guys. Some biographies, but love
autobiographies.
And there's a R.G. Letourneau, awesome book. I mean, the guy's been dead 50 years. He made all these big earth equipment. 50% of all the dirt moved worldwide during World War II was his big machines, like the Army used them all over. Anyway, he obviously doing stuff in the 40s and 50s, but he was alive during the Spanish flu, lost a kid, and then the Great Depression, and the Roaring '20s, and then the Great Depression. His kid it was a 200-page autobiography. It's unfortunate, but his kid who died in the Spanish flu, the pandemic, 1 paragraph in the book, in a 200-page book. The Depression, maybe a page of a 200-page book. And so that's what, I mean, like, if you're going to write your life history, how much are you going to talk about COVID?
We went through it.
It might be a sentence. Oh, COVID happened in 2020. And then you're on to what else you did. And I think that's what we're going to see here. Like, this is the rainy day. The sun's going to come out.
Yes.
And that's what we had to tell ourselves. We have to tell ourselves. Part of this is telling ourselves, like,
100%.
I've been through this. R.G. Letourneau went through this 100 years ago in the Great Depression. And here's how he came through it and how he built his business and how he continued to thrive, even in the midst of tragedy of losing a child, which God forbid any of us have to do that. Much rather have a recession than anybody lose children.
Even in his mind, it was a paragraph.
Unfortunately, because
Right.
he had other children, he had a spouse, he had grandchildren, and all of a sudden it's a paragraph. So,
and I believe right now we're going through a paragraph or maybe even a couple of pages of the book of what we're having to deal with. And, market reset is kind of it. Like we've reset this market a little bit. Things are now changing and we're having to do it different. So what do we do in a situation like that? You got to take and look at what opportunity presents itself.
That's good.
To you, right?
That's good.
People talk about luck and man, that was lucky you sold that house. Nah, that was lucky you picked up that It was preparation leads to luck. If you want to use the word luck, I'm fine with it. But preparation, strategy, thinking, planning, all leads to that. So opportunity. So the two things I want you to take out of this podcast is market reset and opportunity.
yes.
Because that's what this is. When I say why this recession has us excited, because the market's reset and I'm going to see a bunch of opportunity come up. And what do I mean by that? For the next 30 to 48 months, for the last 30 to 48 months, you've had about 4 to 10 investors in bidding on a house that's desirable.
And inventory was here.
And
the demand kept coming, supply kept going down and down. So it got more and more and more and more and more competitive.
Into that bottleneck that we were going.
Yes.
Now you have 1 to 3 pretty savvy, knowledgeable investors going after property. Prices are not coming dramatically down. They're leveling and they're coming down some. I'd be lying if I didn't say that there's things that aren't selling for less. They are.
Yeah.
We're not plummeting.
No.
I dare you to do not sit on the sidelines going, I'm waiting on these to get down. They're not. It's going to be a tick down like this.
The demand, again, it's Econ 101, not to make this too elementary, but it's like the demand is too high and the supply is too low.
Still.
For the foreseeable future, I mean, because it just can't happen.
I don't believe we're going to get out of that shift for another couple of years.
And I'm saying, like, unless unemployment gets 20%, unless interest rates get to 20%, if things get to where they have never been before economically, then things could happen. The chances of that happen are very remote. I mean, it's possible, but the chances are
super low.
It's super low. Infinitesimal. Just
so
baby.
So the opportunity to me is you're going to have less investors looking at homes.
Yes.
You're going to have better quality of product that's going to get to you.
Yes.
Right? You imagine the bread line, they're passing the bread on down or whatever. Like, the bread gets to you. Well, now you're way up. The bread's a lot thicker.
Right.
You can take you a bigger chunk. You're not at the end of the line going, oh, there's some crumbs here left. No, you're up at the front where they're throwing the bread off the truck. And you can, I'm going to pass on that. See what I mean? Like, yes, I'll take this one. It's not, that's kind of how these houses are coming at guys now.
Right.
Like we're having, so here's what the investors, this is really good. Investors now are coming back to me with way more questions about every house.
Good.
Fine.
Good.
You know why? They have options.
For sure.
Before it was, oh my God.
I got to tell you,
there's a house. There's a house. Sign it. I don't. We'll figure it out. Now it's hey, and by the way, this is good for the investor.
Oh, it's really good
that you
for
can
the
take
buyer.
your time and you can look into this and figure it
buyers.
out. Now it's like, Dean, age of the roof, this, that. I need to know some of these. Good.
Yeah.
That means that you're looking at another one and you're trying to compare the two. So all that means is that you're getting better product and you're getting. So I actually think it's better now. I know this is sales, but this will come across as sales, like Dean said. I think it's better to buy now at these higher rates than it was 12 months ago. I'm just telling you.
Yes.
I don't for different reasons, but I think it's better to buy now. I think you're getting a better quality house now than you would have gotten 12 to 18 months ago at a lower rate.
Well, that's what I keep saying. It's like these people who are quitting the hedge funds, and this is good, like these big Wall Street funds, because of the way they're financed, they're pausing indefinitely, which is
hedge funds have paused.
Opportunity.
We have proof they have paused.
And so that's opportunity because they were buying like crazy, driving up prices and just bidding wars and paying above asking and on and on and on.
And that's part of what's going to drive prices down. The hedge funds
they
not
drove
being
them
involved.
up above a dollar.
Yeah.
And now they're back to a more reasonable, and but they're not competing. And so you watch F1 or Formula One?
Some of it. I actually think it's interesting.
It is. And
Super competitive.
It's like blowing up in U.S. right now. Now I just saw they announced they're going to do a race in Vegas. There's going to be a third
in Miami.
They did one
Nashville,
and Austin.
Okay.
And so anyway, it's big. And you remember Senna? He was like the man. He died. He was awesome, and he's Brazilian. Won like
was
3
the
or 4.
Andretti family in that, or were they something else?
Not the Android fan, but he's Brazilian. He won in like, I don't know, the 90s, early 90s. He won several times. He was like going to be the best. He died in a crash. But he said one time, and it's amazing, right? He said, you can't pass 15 drivers on a sunny day, but you can in the rain.
Right.
And that's what this is.
That's great.
Like it was a sunny day. Like now it's raining. Now is the opportunity for the real drivers, like the Sennas of the world, they want to drive on a rainy day.
Yeah, because they know their skill set's better.
The odds are more in their favor on a rainy day than on a sunny day, because on a sunny day, everybody can be good.
Everyone runs fast.
Everybody runs fast on a sunny day. And so I think that's exactly what you're saying there is like once you get all those other people out, then you can be really good.
This is back to where it was in 16 and 17. This is how kind of from a flow traffic standpoint.
Yes.
Which is where
how's a sit
where I wanted to be. How many times have I said to you, this is gold. How many times have I said to you, dang, I wish we were back in 2014, 15. Well, we are. So what am I doing? I'm gearing up and trying to get ready to buy. So I'm hoping that, we talked about being a little bit more personable. Our producer Alec helped us with some of this.
Yeah.
That is what we're doing. I am buying now if the opportunity is right, and I'm finding some. I've got clients that are steady buying. It's a different client and a different process because, like I said, more questions, more info. It's available, so you can take your time, which is what you want.
Yes,
there are some agents that want that blip. Because this is a flash in the pan for them, and they're not going to ever make this much money again because they're in and they're out of the business or whatever.
That's right.
I don't particularly care about that. Money comes and goes. I've been in this too long. I've made money, and I've been just about out of the business for disclosure's sake. So it comes and goes. What I'm more excited about now from the investor standpoint, because I am in a different role than I was then. Now I'm an investor now, and I wasn't then. We are making better decisions in the brokerage. We are setting ourselves up for this, and the investors are coming through just like we thought that they would.
Yeah.
They're coming in and they're offering on homes differently, but this is the opportunity. This is that time and that window where you can come in and find a good property. We wanted to be back here, and we're here now. So there's no reason.
That's good.
There's no reason why we should lie to ourselves. We say this all the time. So don't lie to yourself. This is, if you've done some research over the years and you're looking back, don't lie to yourself and say that this is not really 2014 and 15. The picture just looks a little different, but it's about the same thing. So get yourself active and get out there and figure out what is actually happening. Quit reading the headlines. Because we talked about at the very beginning of the podcast, the 25% is taken over. The fact that we're down 25% is taken over.
The 1,500 sales.
The 1,500 sales. Guys,
the deals.
There's still houses being sold, man. There's still
every day.
And investors aren't buying them just because they want to and for the fun. They're buying them because they're deals. Right? Like, that's kind of what in my mind, I get frustrated with some investors with the fear coming in here. Like, no one's got a gun to your head saying you got to buy a home this month. They don't. Mm-hmm. Take your time and buy the right house. And if it's not for you, then let's move on to the next one and move on to the next one.
Yeah.
Those are the opportunities I'm talking about.
No, and I think that, just on that, my math might be wrong. 1,500 divided by 30 days in a month, I think is 50.
15.
I think it's 50.
Yes.
50 a day.
Yeah.
50 houses are going to be bought and sold
today.
Today.
Yeah.
Today. 50. Like, do you want to be one of those buyers? Or do you want to be one of those sellers if you need to sell?
So that's the real meat and potatoes of all this. Is there's 50 homes being sold today.
Today. Like who's going to buy those 50? Who's buying those 50 houses today?
That's actually really good. So, I mean, taking away today, why this recession has us excited? Well, because it's a market reset and because of the opportunity.
Yes.
Okay. Those are the two things. The market's resetting, and now we're all starting over at the starting line again, and we've reset.
Yeah.
Me and the brokerage, we talked about this. My phone calls are not with my clients from years. My phone calls now are from clients for the last 6 months.
Yeah.
They're interested. They're excited. They're like, wow, I had a guy tell me yesterday, I can finally get in.
Yes.
He's paying 3 points higher. I asked him the question. I go, man, it doesn't bother you about the rates or whatever. He's like, I just have to adjust the way I buy it and factor in for the higher rate. I was like, can I put you on a billboard? And then literally hand puppet you around and say that? That was his exact attitude. He was excited. It's good. Mine. That's ours. And we're trying to relay this. I'm not trying to ignore and tell you that things aren't down. Yes, fine. From what they were, great. There's still 1,500 houses being sold. There's still that 75% that's buying, and there's still that guy that's calling saying, man, I'm excited because now I can get back in it. You got anything else?
No.
I think that's good. I want to leave a right on that high. That's it. Why this recession has us excited? Because there's a market reset in the opportunity, and we just told you what those were.
50 houses a day divided by 10 hours that we work. 5 houses just sold while we did this podcast.
Guys, if you have any other questions, that's fantastic. If you have any other questions, let us know. Dean@CrestCore.com is my email. I help clients buy and sell real estate all over Memphis and the surrounding areas. Reach out to me if you have any questions. Anything else you got?
That's good.
No, good. Thanks, guys. We'll see you next time.